Okay, good evening. You should be able to hear me. If you can hear me, please let me know. This is Hurley Investments Financial Services Commentary for July, Tuesday the 10th. We missed last week because of the holidays, but nothing but a thing. It happens. And let's see. Rich, Dave, Lance, Mary, Abraham, glad that you can hear me. Perfect. All righty. So, quick question to start everything off today. We've just gone through 2 weeks, and I can go ahead and show you the chart. I'm going to go ahead and use the Dow because that's one that had me worried the most. Basically, in 2 weeks, we've broken the 50, broken the 200, and back up again. What's happening right now in our stock market? Whipsaw, okay, but I'm looking for more than whipsaw. What's happening right now? I see tariffs, waiting for the commercial war, trade war. I could buy all those. Let me go ahead and throw a little something else out there, and let's see if you'd agree with me on this one. Right now, we are in a headline risk environment, which means technicals, can't spell, don't necessarily matter, right? Anyone know of the newest headline that just came out about 30 minutes ago? Yep, there it is. 200 billion announced by Trump for new tariffs. Now, there is some good news to it. There's going to be a 2-month review, but if I take a quick peek at the futures right now, futures are only down by 216 points, 21 on the S&P and 56 on the NASDAQ. About 0.87 to 0.78 across the board. So we're in a headline-driven market. So let's talk about trading, right? How do you trade this type of market? And I want to hear what you guys say. How would you trade this type of market? Difficult just came across. So, David, let me ask you to expound on difficult. You can't. I'm going to disagree with that answer that you can't, but I'm going to put some caveats on that. So maybe it's not the best trading environment. Obviously, a lot of your bullish trades that were following the stock market technicals, bullish trades on a bullish market, supposed to make money. You're doing nothing but following the trend. But that doesn't mean you necessarily can't. Far out of the money credit spreads is an alternative. Meanwhile, that is, you could do far out of the money credit spreads. It's a high probability, but it's also a lot of risk for a very little reward. But they do work, except for, obviously, when you get a move like this below the 50, and then 3 days, 1, 2, 3, 4 days later, you're below the 200. causes you a little bit of heartburn, a little bit of pain. The good news is, though, if we could go ahead and put a little comment on here, the Dow is technically bullish again. If we take a peek at the S&P 500, it was testing the 50-day, and it is also technically bullish. And we have the NASDAQ, which is also technically bullish. Now, if we were to talk last week, we would have been technically bearish. And we're only technically bullish as of yesterday. So, Dave, I didn't see you type something in. I want you to expound on difficult. Because in all honesty, technicals don't work, right? Fundamentals take a longer term approach. Anything bullish really took a hit that most people got out pretty convincingly. I'm asking this because, in all honesty, the last 2 weeks were brutal. For some of what I did, when I saw something like Bank of America breach 28, I had to add long put protection on, which means, so I'm going to put this, as individual stocks, can't spell here, as individual stocks broke longer term support, I added long puts for earnings. Examples, Bank of America, Baidu, I have long puts, and Bank of America is at 28, Baidu's at 250. Ford has some long puts on. I'm not an Apple. I don't think I'm on Disney. I know I'm not on Visa. Freeport McMoran, I'm not. What else do I have protection on? Facebook, possibly. I think I just have short calls. So it's not like I added an extreme amount, but I added some puts for earnings. Other stocks, I added short calls, and that was Apple. What else did I add short calls on? Disney had some short calls on it. Facebook has 200 short calls on it. Zions Bank has $60 short calls. And others, as they approached support, I added short puts. Baidu at 240, 235. Under Armour at 20, 21, 22.50. I've got different ones spread across there. What else would I have? Visa, I added for some new opportunities, 130 and 125 short puts. And that is about it. So there were some areas where you could pick your poison. But moving up to how you trade this type of market, Dave, again, I was looking for you to say a little bit more here. Difficult, but the rules change this way, but your rules no longer matter or are applicable. When you're trading in this kind of uncertainty, your rules that you have don't matter. In fact, it's somewhat ridiculous, in all honesty, that we have to deal with some of these type of issues. It's the pits. That's the best way to say it. It is the absolute pits. Hopefully, some of your long puts from your previous earnings may still be available, so you could ride some things down. I did not have a whole lot, but I'll tell you, there are some advisory services that have gotten hammered, that the last 2 weeks have ruined 2 months or a whole year's worth of trading. Baidu were able to add 100 shares. Ford were able to add 100 shares this year. American Outdoor Brands Corp, we added 300 shares over the last year. Bank of America, I think I've been able to add 100 shares, and that's about it, actually. So there are some opportunities, but they are far and few and in between. It's not like when you have a bunch of spread trades that are bullish following the market, when you adjust them to a bunch of bearish and they're back bullish again, you don't make money on those type of adjustments. It's extremely difficult. And when you see the the VIX go from about a 14 up to a 20 in a day, 6 points, a 42% jump in a day, you're making your best educated guess. And I'm going to go ahead and stick that right here. You make your best educated guess on what you think the future holds. It's not a probability. It's not past experience, although that does hold a factor, a part of it. You literally are doing nothing more than making your best educated guess on what might happen in the next 2 to 6 weeks. I thought this was interesting, and I'm going to show it to you. I had and downloaded the double trigger, Wealth Press double trigger, 2 simple red lines that hold the key to financial wealth. So someone tell me, what are those 2 red lines that are going to hold the key to all your financial wealth? Take a guess. Everyone give me a couple guess. So let me read a couple that just came in. The best way to kiss your money goodbye. And Maud, that was beautiful. Lance is very close. He said kiss your, and he has an A with $2 signs. Goodbye. So Maud and Lance, I love it, both of you. So pretty interesting, because what a crock is what I'm going to tell you. The first one is the 50-day as a trigger. And of course, they pull out something like NVIDIA, a gap up on earnings, but they're simple steps, which I just scratched my head at. Where is it? So you pay this guy all kinds of money. The disclosure is ridiculous. But where is it? So here you go. First, you need a long-term trend. It can't be too strong, and it can't be too weak. So you need a long-term. You have to identify a very solid and stable long-term trend, which means if you're going to take NVIDIA, you had to see it for 6 to 8 months. Totally missed the opportunity. But second, you have to have a target short-term trend with a high probability of reversing. Anyone want to tell me how you have a high probability of reversals? Well, of course, it might bounce off the 50-day. And third, look at this garbage. You have to know exactly when to get in or where to place your protective stop loss, which is really not protection, as an experienced trader learns. So it's absolutely hilarious because I called into them. I said, let's give me a current one, because they circled where these critical points were to get your reversal and where you set a stop loss. Yet, you know what? When I asked them any current positions, well, we don't have any. There are none. So obviously, if you look back in time, guess what? It's pretty darn easy to see where those reversals are. Practical application, they're pretty much full of garbage. None of what they're talking about makes any sense or will actually work. So looking at the double trigger, and if I took a peek at this one, double trigger from Wealth Press LLC, do your own research, forward-looking statements, net risk. I mean, there's all kinds of garbage in here. Hypothetical or similar performance results have certain limitations. So actually, this is hypothetical. Since trade has not been executed, the results may have under overcompensation, the impact, if any. So yeah, I mean, it's garbage, guys. The shortest answer is, in real life, it's garbage. But someone's out there selling a double trigger red line. You magically understand where reversals are, and off you go. Kills me. Because in all honesty, you're making your best educated guesses. Why are these best educated guesses in 2018 so hard to make? Why are these best educated guesses in 2018 so hard to make? Type something in. Everything is so reactive. David, love it. Trump can't stop tweeting, mod, tweets, etc. Okay, well, I'm more of a history buff, and maybe I'm going to go ahead and hit some things that maybe you guys don't think about. Historically, we've had one intraday correction. We have not had, pullback, a 10% pullback. We've had one intraday. We've had, I think, 3 of 7% or more, but we've way overspent our correction by at least 2 years, if not 4 years. Every 4 years on average, or 4.4 years, you have a 20% correction. You have a buying opportunity. We've never had the amount of stimulus that's currently in our stock market. Well, Kevin, that kind of ended with Obama, which is true. But that stimulus is working its way with a 2 to 5 year life extension. We have stimulus from the federal government that's got to the tune of what, $4 trillion for treasuries. We have regulations on the certain amounts of cash on hand banks have to have for stress tests. There's we're way historically overvalued on a price per earnings. 27 is usually the high side. I think we're up in that 32 to 35 range, probably a 32 now with a little bit of pullback on the S&P. We have record number we have historical record number of money for buybacks. Over $1 trillion approved by the SEC for stock buybacks. Once again, we are in some unprecedented times. Much like 2008, no one saw Great Depression in our stock market. No one's lived through Great Depressions that's still alive doing this. All those people are dead for all intents and purposes. So there are no market experts, and we're living in a time where we still have significant first time, never seen it, not sure what's going on type of things in our stock market. It's your best educated guess. And I'll be the first one to tell you, there are a couple stocks I could have done much better protecting on the way down. There are a couple stocks that I could have done much better on taking a chance at a bottom. It's not easy. And it's not easy when you spend a lot of your time, 8-10 hours a day, reading, studying, looking at stock markets, going back to past history, running valuations, running price to earnings checks, running future value checks. There's all kinds of things we do at Hurley Investments that still, as you take a peek, you're in some deep water. Some of the questions are, when you decide to protect those equities? So the ones that have long puts, we only protected Bitey's not fair. Bitey we protected below a break of 260, which happened a couple weeks ago. Ford and Bank of America, we really just protected here recently, a week ago. So in all essence, what we had for Bank of America is off by $1 now. For Ford, we're right in line at $11.50 and $11, right where we're at. So it's funny because even a week and a half ago, protection was put on because of the volatility. Doesn't really do us some good when you see the VIX go down. Even though we have a good price at where we're at for Ford, we're not going to be profitable on it. A lot of volatility bled off of it. We tried to go out in time to minimize the volatility and the volatility crush that we'd run into. Things might pick up tomorrow, but Ford's at 11.19. I think we protected at 11 when it was at 11.25ish maybe. But they're protection through earnings. And some of our earnings that we're going to go through, I'm going to go ahead and run. I've created more of an earnings list that's available here. Some of what we're protected on earnings will be, I would tell you, long puts at 28. We're going to go out of the money for this earnings. Ford, long puts at $11 and $11.50 for some. Facebook will be long puts at 200. Visa, for new shares on Visa, long puts will be added tomorrow, most likely, at 135. I still have some Visa that's protected with in the money covered calls. but we'll most likely look at 135 August. Apple will most likely have 185 August long puts added tomorrow. Just trying to protect myself into earnings. Baidu, I could do an already, has August 250. Under Armour will most likely add 22 August long puts. Zions Bank probably go out of the money. They add 50 or 52.50 long puts August 4th week. So they're just ways that I'd look at it to see what I might do. Going through a little bit here. What's happened this week and why? Kind of comes down to Trump tariffs and travel this week, but he's traveling for trade, new trade policies, right? New trade agreements. Got to start seeing some of those come in. If you ask me where our markets are going to end this week based off of today, I'm still going to go with lower. We've got a couple up days. Wouldn't surprise me to see a test of the 50 again, which means on the Dow, 24 and 119, 50-day at 24,646, 250 points down there, 270 actually. S&P up at 293. We've got 227.90, 27.28 from 27.93. We're literally looking at about 65 points there. Probably see technology hit. Kind of looks like a double top almost. Worry about a double top and down it goes from here. So 77.59 to 74.08. We're looking at, 350 there, right? 74.98. Sorry, so 75, 261 on the way down there. I still did think we'd end July at 208. That really comes down to earnings. We're going to hit earnings really start on the 18th with Alcoa. We'll have options expiration next week, and then we run right into earnings the following week. In fact, for me, it is Wednesday the 25th. Holy crap. That's all I can tell you. I have, if we look at this, I have the 26th for Baidu. Ford will be on the 25th, Facebook on the 25th, Freeport McMoran on the 25th. Mosaic is scheduled for the 26th. Visa for sure after the market close on the 25th. I've got a lot of my stocks going to hit the 25th, 26th. It'll be moving. I'll have some of my portfolios that are really moving here in July. Really not too much going on that by way of economic reports. Earnings we're going to have on Friday, Citigroup, JP Morgan, Wells Fargo. Those could possibly move our market, give us a bounce up. Internationally, nothing going on this week. Sunday, we have China, though, GDP, industrial production, retail sales. Obviously, if they're feeling the sting of tariffs, we will have probably a down open on Monday. If it looks like they're bucking the trend, we'll probably have a down day on Monday because they're bucking the trend. I found some interesting articles over the last couple weeks. Don't know if I've shared them with you or not, but just 3 stocks responsible for most of the gains this year: Apple, Facebook, and Alphabet. In fact, looking at some of these, the 3 stocks make up a 35% return on a 35%, 20% of the S&P 500 returns, 41.21 is 50% of the NASDAQ returns, and 71% of the S&P. So let me do this again. Amazon, Netflix, and Microsoft together this year are responsible for 71% of the S&P 500 returns, 70% of the NASDAQ returns. Apple also makes up 12% of returns on the S&P and the NASDAQ. Alphabet and Facebook contribute 8%. So it's really Amazon, Netflix, and Microsoft that are giving the biggest gains this year on a percentage basis. I found that interesting to share with you. Companies buying back their own shares, only keeping the stock market up right now. I think I talked about this 2 weeks ago. Found an article published on the 2nd in regards to that. Facebook, remarkable bargain. I am hoping to get called out on Facebook at the 200 level here next week, and I'll convert most, if not all, those profits into straight long calls to June 2020. It'll cost me about $40 a contract. Investors are yanking money out of the stocks at levels not seen. I brought this one out for you guys to be able to read. And all 3 times the market rose in the summer, stocks end of the year higher. Found this rather interesting, just something to show you a little piece of history. Any questions you guys have that I can answer for you today? Really, I was just trying to show you, or just trying to make some comments that it's easy to look back. There are no simple shortcuts, and don't try to come up with them. Don't make them up as you go along. Use a little common sense, be a little prudent. I would much rather be a little extra safe with my money versus gambling out there on some things that possibly can come to pass. I struggle, nor do I want to ever gamble with people's money. That's just not who I am. That's just not what I do. Any questions? So I knew you'd sit on this one. So Dave just asked me, what are my thoughts on Apple, Baidu, Ford? And I'm sure I can go through on some more of these, but let me put this into some simple expectations. Apple, I think, can keep beating its numbers as well as Baidu. Both of them have been pulled back due to headline risk. Bank of America, I'm confused on. I thought Bank of America would have been at $35 already. If you take a peek at the last 3 years, it looks like Bank of America makes its 30-40% moves starting in October and through the end of the year. Sometimes it'll start in August, but really it's an October through the end of the year move. I'm shocked. Disney came out with another $78 billion movie on the Ant-Man and the Wasp. Just saw that one today. They should be significantly higher. Facebook, if you read my article, seems to be a good buy going into the future, but we'll see some volatility. Freeport-McMoRan, even though commodity prices are going higher, they have yet to receive the benefit. It looks like China's dumping huge amounts of copper. Altria, I'm uncertain of. I think Under Armour is a screaming buy with how far it's come down. Visa, just at an all-time high, is going to do very well into a recession. Zions Bank is my regional bank, but it's come off of 60 down to 52.50-ish. In fact, I don't know exactly where it's at. Let me take a quick peek. But I would have thought, in all honesty to you, I would have thought that a lot of these stocks had done better. Zions Bank's at 52, 53.41, 53.19 after hours. So it's confusing. In all honesty, it's confusing. And when I'm confused with the stock market, I'm more willing to sit back and do nothing. In fact, I just had 2 comments come in. Thank you for not gambling my money. Kevin, this is why I use you. Thank you to both of you too. But, you know, my best guesses, in all honesty, were adding some short puts to Baidu at 235, 240. A 2250 on Under Armour. If it looks like I'm going to accept stock ownership, I can go out in time and take the stock ownership and get ready to run it through earnings coming up. Visa, a short put at 130. I could take that ownership and run it through earnings coming up. My gambles on short puts, if you want to call it gambling, are pretty decent prices to get into stock ownership with plenty of time to be able to add long puts on if I need to. I don't want to cap a Disney, an Apple, a Facebook, any of the banks because they haven't run like they're supposed to. So it'd be my luck to cap them and then watch the suckers take off. Well, Kevin, you have 109 short calls. I do on Disney. I went way far out in time. I went way far out in a strike price on them. Zions Bank, I also have $60 short calls, but I put that on at like the previous earnings and went out 3 months. We're taking a huge credit, like a $3.40 credit. I do think financials will run into the end of the year. They most likely should. Doesn't mean they're going to, but they should. And I'll be honest with you, I struggle sometimes. When I struggle, I sit back and I start to watch. I need to have an explanation to those 2 that are here with me tonight. I need to have an explanation to my clientele. I don't have to be right all the time, but I do have to have an explanation to my clientele on what I'm doing and why. Any other questions? Hopefully you had a great 4th of July. I'm going to talk here for a minute or 2. Earnings are the next play. You know what? We should have great earnings. We should have earnings that are still going to beat year-over-year expectations this quarter and next. It's really driven by deregulation and tax, so there's no reason why companies wouldn't beat earnings this quarter and next. They might beat them big in January, but guidance and then future earnings will be significantly harder to beat because they don't have deregulation in the tax. So it's going to be a little more difficult, a little harder to do. With that said, I'm expecting for a good earnings season. I think we will bounce back up to be at 2% for July. Not hard to do when already on the S&P. We're already looking at 27.20 below the 50-day at 27.93. Boy, we already have a pretty good July in the works. So at 2% isn't unreasonable. It's just how am I going to protect and make it through these earnings? And if there is a miss, boy, if you miss this quarter, you're in trouble. Things are really, really going to be ugly for you as positions lose money again and stocks go down. All right, guys. Hey, I appreciate you here today. I don't see other questions coming in. So with that said, have a wonderful week. I will get this on off and posted most likely tomorrow evening. I appreciate you being here. And if you do have any other questions, you can always email me at K for Kevin, K Hurley at hurleyinvestments.com. Bunch of different ways to get a hold of me. And we'll go from there. Here we go. Beginning of months are uptrends, in the middle turn down. It seems the way, Abraham, but I would not expect that to quite occur in July due to earnings. But the last 2 months, that has been the trend exactly. January was a huge up. Oh, this is the NASDAQ, I'm sorry. January was a huge up. In all honesty, February was a big drop down and somewhat of a recovery. Not really, though. March up in the middle and then down at the end. April up in the middle, down at the end, but still profitable. May up and sideways is profitable. June up in the middle, flat at the end. It's difficult. There are uptrends, downtrends, and sideways trends, in all honesty, in all of our charts. I don't really see a continuing beginning of months for uptrends, middle of turn down. It's difficult to see. The neat thing is we're being honest with ourselves and not creating a two red line bogus signal that I wonder how many people have spent money to do that. I just scratch my head and I go, oh, what are you thinking? Really? All of a sudden the 50-day and you can pick bottoms out of the air? Come on, people. Why are you wasting money? And come on, company. What a crock of garbage. It's funny because you read the disclosures and the disclosures tell you they've never done it with real money. They're going back in time looking at a chart pattern saying, guess what? You could have done this. Well, no, you know what? No kidding. Anyone can go back in time and tell you what you should have done. Ugh, bugs me. Can you tell? All right, guys. Hey, you have, love it. Someone just typed in very honest answer. Not spending in advance because of crystal ball, needs some type of confirmation. Great way to say it. It really is. You need some confirmation. Even more so, you kind of need Trump to be quiet. You need him to succeed in some of his trade deals. We kind of need China to fold a little bit on us. So it'll be interesting to see what happens. We're at the point now, though, where we basically are putting tariffs on everything. That's not true. It is. China buys 165-ish and we buy, so we're putting tariffs on half of what we could buy from them. This is going to hurt their GDP. We got tariffs on $250 billion worth of their goods, which usually mean it'll go up in price. It's already not necessarily the best quality. So we're looking at tariffing, out of the $510 billion we buy from them, 250 is going to be a higher price, which means there should be less demand. This will affect China's GDP. Interesting to see how it turns out. Guys, have a wonderful night. Appreciate you being here tonight. Look forward to seeing you next week, and we'll talk with you then. Bye-bye.